everybody doing? All right. So we have some yields on the rise. Markets are in red. We're at 7711, which is about 34 points lower than yesterday's close. We have some decent support right at this 7,700 level. If the market breaks, this is a big if, this would be way outside the expected move. But if we break below 7,700, things get pretty ugly pretty quickly as far as a sell off and maybe having like a 1+% sell off day. If things hold at 77, then there's clearly key support, and we'll see if that holds for the day. But a couple levels that I want to note: 7790. I'm going to write this down for daily profit play: 7790, 7670. That's all based on the expected moves, okay, which, by the way, are not big. So even though the markets are down, the VIX is barely moving. VIX is at 15.7. It's up a little bit, but we have not seen a flare up to like 16, 17, 18, 19, even 20. Again, the market's down like 1%. It's not that big of a deal, but after 4 to 5 days of ridiculous squeezing, could the market give some of it back and backfill like we talked about? Yes, this is what I'm kind of looking for, actually, is the market kind of backfills into that Monday, Tuesday push. And there's a 2.3% area, because that's what the market gave us to the upside, because that was like a 4 to 5% rip to the upside, right? But if we fall back, we either hold at like 7,700 or we don't. And I know we have, it's just a Tuesday. It's not like there's crazy pressing news today. There's FOMC on Wednesday. There's OPEX on Friday. We have Jackson Hole, NVIDIA, core PCE all next week. So, we could be highly anticipating all this wacky movement, but it's like, it's just a Tuesday. So we'll see what happens. But if the market breaks below 7,700, I would say it is quite vulnerable to a pullback. And that pullback from recent highs could be somewhere in like the 3 to 4% range. If we pull back to retest these lows, that's a 6.5% range. Could we come back and retest the previous all-time highs? That's a 10% range. That obviously gets a little bit uglier, but I think that's where the pressure might be coming from. If we see, here's the 10-year yield sitting at fresh highs. This is not a good look. I don't know how this isn't putting more pressure on equities. The 30-year yield, all-time high, or not all-time high. I don't think all-time high, but it's been a long time since we've had highs at 5.3%. Here's a monthly. So clearly not all-time highs, but it is going back to 2007. Last time that we had, and again, not that that's any, oh my gosh, it doesn't correlate with 2007's like great financial crisis. I'm just saying that yields are rising. Okay. And we continue to press higher. So clearly the bond market wants their premium in order to take on this risk. The 20-year also making fresh highs. Here's the daily. So unless it's going to respond very quickly to the downside, this is where I think the biggest risk comes in the markets. So risk premium, demand going higher, puts pressure on equities, chokes out some of the growth at these recent all-time highs. Market might have to have a bit of a ventilation. We'll see if the Fed is going to somehow thread the needle and navigate this with maybe raising, which the market's not going to love. I think it's going to have an adverse reaction, but I think there's a way to get through it. It's just, I don't know. It doesn't necessarily mean the Fed is going to go into a tightening cycle. It just means they've got to do something to get the bond market to respond a little bit more favorably. Okay. All right. Doug says, is the trade you placed this morning? Yep. That's why it's in double ups. Double up alerts, global hours. I put this trade on. Again, this is a low risk trade. So in case we are going to break support, this is an if. If we break support and we slide lower, price gravitating towards that butterfly spread down here should pay pretty well. Again, if it doesn't break 77 and it bounces right back up, it's a wasted butterfly spread. So it's only if you can take the trade with global hours, because I want to get into it. You can get into it at opening bell. It might be cheaper, actually. But the other trade I'm going to get into for double ups is I'll have this butterfly spread down here at 35. and I'm going to put another butterfly spread in around 77.50. I'm going to take my chances on this one and this one as far as like pretty inexpensive. If price fluctuates here or here, they should, I mean, hopefully one of them can turn a big enough profit if they're cheap enough and wide enough that we can take a net profit out of this. Okay. Royce has got filled at $1.45. Great. Way better than me. Okay. So I mean, again, the market's going to open in 15 minutes and we're already trading at 77.09. It's still quite a bit out of the money. So it's most likely still going to be an inexpensive trade. You don't necessarily need the global hours. I just got into it because I was in a previous session. I was like, well, I'll take a stab at this one and get the fill. So I may have paid more for it than needed, but to go 35 wide for $1.80 or $1.90, I think is a pretty decent fill. If price is even trying to go, below 7,700, that should offer a few $100 of profit, I would hope. And the other one I'm going to trade is going to be this 77.50 or 77.60 zone. See if we pop back up here towards HVL. If all we do for the entire day is just sit here and hang out and pin around 7,700, then I'll probably take a small loss in the day because I'm not going to trade this one for expensive. I don't want to trade an expensive butterfly. I don't think it's going to stay at 77. I'm hoping that with negative gamma today, here's the gamma profile. I'm hoping that with negative gamma today, the market it's going to be a little jumpy. So either we head back up to 77.50 and try to fight back, or we break this put wall, and you can see it's pretty open space down to like 76.50 or 76.35. There's a lot down here. There's a decent size, absolute gex, but I like the kind of max put pressure to the downside if we're to have just a bit of a shedding day. Okay, TLT, what do you want to do with it? You want to buy the melting iceberg? I mean, if you're buying TLT, you're just essentially hoping that there's a top in the equities market, which I think in the short term there probably could be. But I want zero TLT in my portfolio. I'd rather trade gold. I'd rather trade silver. I don't know if this bond market stuff is going to be a massive flinch and break like we had back in 2025. Where that rate of change was so aggressive that it just like snapped everything back in line. I don't know if we're about to have a break like we had back here in 2022 before we put in a bottom. So I just have no interest in calling the bottom. Like this thing could be, flush everybody out with some type of like flash crash move. And then we bottom and it's like, oh yeah, TLT is a great buy. $10 lower. I'm not sure, but TLT is not in my portfolio. Close VIX crash insurance. I mean, Tom, it's already pretty much full risk, yeah. And why would you close it if we have a chance to get the VIX to flare up? If tomorrow, the VIX can flare up to 20 plus, I mean, we can maybe get out of that thing unscathed with a break even. So, I mean, we'll close it before expiration, but I don't need to close it a day early. It's like, I'll just close it at expiration. But if we have a chance for it to flare up, then great. TBT. Anytime you tell me leverage, it makes me nervous. Interesting. So what are you short here? You're leverage the daily performance of the Barclay Treasury Index. I mean, okay. I don't know. I mean, I think there's something big brewing in the bond market, in the yield market. I mean, clearly the Fed, I mean, they're not stupid. Like the Fed has to do something to try to get this thing to flinch. The 10-year yield's heading higher. My concern is that we have a flare up like this. We have like a break and then we have a correction. So it just puts the absolute stop on everything. It could be like a hard top in the equities market in order to have like a sharp correction, and then we just have to like rebuild. It's one of those it's one of those setups where it's like, I think something breaks before we actually have a clear top or clear bottom. Yeah, it's a slow mover, but you still have all the leverage in it. I don't know. I don't love it. If anything, I'd rather see a VIX event and then get long SVXY, which one thing that's very annoying is since 2025, I bought this thing at $35. It'd be nice just to hang on this for, I don't know, 67% gains. I bought shares at $35. I mean, I held it up to 50, but my gosh, that is this is a vol suppression tool. So if the VIX flares up, I mean, hopefully it gives a chance to buy a decent dip. But man, feels like that'd have been nice. Anyway, we'll see. So for today, here's prep. We're trading live at 77.09. Is the market going to hold 7,700? Plus minus on the day setup is 34.22. We'll make a small adjustment here. 34.2. That does seem still very, very small. I know that yesterday we did close outside the expected move box, just barely. We had a 29. I'll put this at 34.2. So I had a 29.2 this morning. Or I'm sorry, 29.2 yesterday. So that was the expected move box yesterday. We closed outside of it. We are pushing another 30 plus points lower to the downside today. So we're opening up around 77.10. Expected move box now, I'm adjusting to 34.2. And then I'll take a gap adjusted in consideration. So we're going from this close up about 34 points. So that's around 77.80. And we're opening up around 10, 34 points. That's around 76.76. So if we push down into that zone, that out of the money 7635 butterfly should offer some decent profit. If we hold that 7700 and bounce right back up, I want to build a butterfly around 7750. So I'm not looking to take ridiculous amounts of risk today. It is about building out hopefully solid trades. So I'm looking to get a butterfly spread here, and I'm going to go back to HVL, see if I can get a butterfly spread here. If I want to trade something around 7,700, I want price to go down first or up first, and then I'll position for something that's out of the money to make that trade a little bit cheaper. So what's your resolution for that, Pete? Like, what's the market do? I mean, certainly the circular finance is making the cost of capital more expensive. So there's the spike in oil. There is everything's more expensive. The cost of capital, the circular financing, the debt issuance, it is crowding out global liquidity, which is why I think the risk premium is going up across the board. So again, like, I don't know how this gets fixed or resolved without something flinching or breaking. Bond yields or bonds? I mean, yields going higher, it's like, I just think they go high enough where it becomes a problem. Yeah. Yields going higher, I think it just gets to the point where it's like, it's a problem. It chokes out growth, it crowds out liquidity, and that liquidity crunch probably doesn't look good for equities. There's probably going to be a correction of some sort. Now, is that the all-time high and all-time top, and we're heading into the lost decade right now in August of 2026? I don't think so, but I think the market does have to, cool off a little bit, have some ventilation. So, descending wedge. I mean, TLT. I don't know. I don't want to touch this. I mean, here's the easy thing on TLT or whatever you're building out here pattern wise. I'm sure there's a good long in here somewhere. My concern is like, I just don't want to call the bottom. It's clearly stacked lower, stacked lower, stacked lower, stacked lower. All the pressures to the downside. I think you're guessing at the bottom. If we have like a big flush out, like this massive capitulation move, then we probably put in a bottom and have a great return back to these equilibrium levels. But that's where I would say, yeah, I'll take a stab at that. Like going, long calls at 70 to take this back up to 82 could be a great trade. But to guess the bottom is right here, it's like that's not the trade. There's too much pressure. There's too much follow through to the downside. We can still have this thing push. I mean, this is like an old forex lesson. A forex trend continues, 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 continues. You're like, there's no way it can go any higher, and it goes bam. It flashes up, and then it corrects, and it's a multi-month top, and it gives it all back, just like you thought it would. But it's that 500 pip, 1,000 pip crash that changes the entire posture of the market, puts in a massive top, and then spends months and months. But it's like this ruins so many traders. So in a way, it's like the direction of TLT I could see doing something kind of similar, which is like it just keeps pressing lower and lower and lower and lower and lower until it like breaks, capitulates, and then it becomes like a great buy trade. But that great buy trade is not on my radar right now. Highs and lows. Yeah, write this down. 7790. 7670. Okay. Now, are those guaranteed highs and lows? No. We're much closer to the downside right now because the price has been pushing lower. But as far as the expected move, which is still not that big, 32.8. I just saw 34 a moment ago. I put it into my expected move box here. 34.2. It's not a massive move. Our VIX is still trading in the 15s, by the way. 15.85. The VIX is up 4%. Wow, what a bit. This is nothing. So, I mean, is today the day the market just like cracks loose? I don't know. But just read the tape. Manage risk. Okay, double up shows 250 on the trade. Okay, good. I mean, if you got in with me, then we can make some profit. If you didn't get in with me, then we'll debate whether you want to get into it or not. There are two levels I'm going after today. If we continue to put pressure to the downside, I want this trade to offer up some profit. So I got in for $1.80. If you got in for $1.50, got in for $1.40, great. You can scalp. You can grab some profit this morning at opening bell. The other level I might look at is the 77.50. If it is cheap enough, I'm going to look for a 20 wide here and see if that will also offer some profit. So if the market is going to fall down towards this put wall, and it's not even a put wall, the put wall is at 7,700. It'd be breaking that put wall. And I think the market is potentially just heading towards a larger out of the money gamma at 76.35. Yeah, that makes sense. I mean, and Yardeni's a pretty big bull, man. I mean, he's the guy that's been talking about the roaring 2020s essentially, and his targets are 8,000 plus. I mean, he still sees it, but yeah, I think there's just cause for concern. And the seasonality, it's like right now in August, what do we have to deal with? We've got FOMC this week. We've got Nvidia earnings, Jackson Hole, PCE. It's the one of the most vulnerable windows in market seasonality. Every single year, August, September is always a shaky, tricky couple of months. So, we manage risk. Like that's the best we can do. So today for daily profit play, here's what I'd like to do. If I'm going to take a trade here, I'll probably do a 5 wide or a 10 wide and have a lower risk, higher reward setup. Okay. Exactly right. P says loads of numbers and events, loads of data, no liquidity. True. I mean, it's not no liquidity, but it's certainly lighter volume and lighter liquidity. And it just makes things, kind of easier to move and manipulate. And it goes both ways. Okay. So if I did an iron condor today based on these numbers, if I went 10 wide, I'm going to say give me like $8 to risk 2. Like I'm not messing around with a, big risk trade today. Okay. So, I can put the trade in right now. Let's see what happens. Let's go. And one thing I'll look at, I'm going to put this in for Flashpoint this morning for Flashpoint income. Okay. Note for today's Flashpoint alert. Because the market is gapping lower, I'm going to enter the tsunami level only this morning. So when the alert comes out, I'm only looking for the tsunami level because I feel like the Flashpoint is going to be already activated based on the market's already down 30 to 35, 40 points from yesterday's close. So let's see what that looks like. We're at 7703. Let me take that little check on that scalp this morning for SPX. So that's up. That can't be right, but let's find out. This would be double up 7635. Okay, I mean, it's up 30 bucks. So don't get too excited. But let's see if the market can break 7,700 and slide lower. And I'd also like to see if I can play the 7,750 if that's not terribly expensive. So 7,750, fudge, that's 25 wide. Let's go 20 wide. 270 is not the end of the world. I'll take this one here. It's about I don't want it to go too fast. 265-ish. So what I'm doing is I'm doing a 50. I'll go 55, maybe a little bit cheaper. This one's not too bad. All right, so I'm going to go 7755, 20 wide butterfly for double ups. Get this thing for like a 240 debit or so. All right, I'm throwing this for double ups. All right, so 7635 fly. I'm in. That was global hours. And I added a 7755 fly based on today's HVL, which is the positive and negative gamma pivot. So I'll have 2 butterflies running for right now. Okay. So what is the 3570 7600? So I mean, I'm like, $40 on that trade. It's still not terribly expensive. If we think we can get a breach, if we can breach 7,700 today and head lower, this gamma still looks attractive enough to see the price will get there. Like, this is not on accident. Like, this level matters to me. Now, the big breach is we got to break 7,700 and fall. If we do, I think we get there. I think this butterfly can pay a lot. So seeing it trade for like 210, 220, 225, it's not expensive. For a 30 wide or 35 wide, it is not expensive. Okay. So I'd still be willing to take that trade up to like 225 or 250 debit for a 30 plus wide butterfly. That's a big profit potential. So what I'm doing is I'm essentially surrounding, can we get price to gravitate back up towards 77.50 or fall down towards 76.35 for right now? Now it might be very noisy around 7,700. Okay, fine. But that's the most expensive trade right now, so I'm not going to take it yet. Okay. All right. So that's 2 butterflies. Keep an eye on things. Let me go ahead and just label these. So this is the 7755. Oops. All right. So keep an eye on these for some profit. I mean, max risk $1.90, max risk 240. If prices, going into the wheelhouse of those profit traps, they're both out of the money enough and wide enough that they should offer. I mean, if one can offer $300-$400 profit, I'm probably going to scalp between the two and take the money. Okay. For daily profit play for today, We are sitting at 77.05. Okay, just seems like a very noisy open right now. Look, a lot can happen today with a negative gamma environment. Okay, if we crack 7,700 and fall, it is pretty open to fall to our profit. Our profit trap sitting down here at 76.35. The expected move. If I want to trade this like 76.70 zone, which I don't mind doing, let's put a trade in for daily profit. I'm going to try to put this trade in. That's going to be, well, crap. I've got my butterfly there. So I could go, that low is 7670. Let's try a 65 by 55. And then on the upside, let's try 77.90. I doubt it's even going to get there, but 90 by 7,800. So right now that trade is offering about $1. There's your 11% return on risk. Do I love that trade? No. I don't mind the trade for like $3. If I wanted to still put in a little bit more risk, $3 or $250 credit, risking $750. But I'm just going to play, give me a lot of credit, give me little to no risk. So risk 2 to make 8. I'll take that trade. And I'm going to go lighter. I'm going to go 850. Like low risk. I'm not playing high risk stuff today. So 77.90 by 7,800, that's 10 wide. 76.65 by 76.55, 10 wide. And again, this, if I put in like 8 or 850, it's not going to fill unless price is breaching one of our spreads. But I'd rather take the tiny risk for today. So that's going to be my pending order for daily profit play. Pending order. Pending order, and this is a low risk trade, which usually we don't take low risk in daily profit play, but I'm doing it today. So SPX 818. I'm using the exact expected move box gap adjusted. So the 77.90 call, 7,800 call, 7665, 7655, 850 credit, which is $1.50 max risk. Pending good for day. All right. So I certainly want to see what price does today. Do we break and crack 7,700? If we do, with bond yields going higher, if we crack 77, it is pretty open to get into that big fat butterfly to the downside. I'm going to make a game time decision. If price is breaching here and my double up trade is up $300, $400, $500, I'm probably just going to cancel my daily profit play and not even have the risk on the day and just take the profit from here. Or do we, I've got both in. So I've got both in. You can enter in probably at slightly favorable prices compared to what I got into. I'll show you what I've got right now. So the one at 7635 is flat, and the one at 7755 is negative. So literally you can get the trades for probably 50 to 60 cents better than I did combined. So what do you want to do? Like if price goes back to 77.50, a 20 wide pays very well. If price gets to like 76.50 today, even 76.60 today, this would pay very well. But if price just sticks to 77 and does nothing today, well, I'm taking some small risk trades. So I'm not ready to say like, oh, 77 is the pin price. It's 38 million on absolute GEX. This is not convincing enough to say that this is a sticky level on the day. Okay, if we look at our expected moves, so our smart range is here. The opening bell adjustment is showing we could have a low around like 65 or 60. That would look very good for this butterfly down here if we do end up testing these lows. If we get up towards 77.40 or 45, it looks really good to have that one around 77.50. The hardest trade today is if price does absolutely nothing and just glues itself to 7,700 all day long. That would suck because that trade's not going to pay and that trade's not going to pay. But am I blowing up my account? No, I'm down a couple $100. The limit's what? To get filled, Jerry? I mean, they're 2 small debits. Yeah, I mean, you can get into the trades right now. I mean, I got in for $1.90. It's probably trading for like $1.65, $1.70 right now. Cheaper. The 240 debit's probably trading for like 215, 220, cheaper. So you get into both and probably save yourself, 20, 30, 40 cents from what I entered in on. Okay. So I'll just hang tight. So let's see where price ends up going today. Let's see if we get a chart alarm. I mean, again, gap to the downside. Flashpoint's coming out here. Should be out now, right? Flashpoint should have been posted. Flashpoint alert did pop out. So 7631 is our pain point. Well, interesting. 7631. That's a 30. I mean, I do like that trade. I mean, the only issue is like it seems like it's just open space to get filled. I don't know. Let's assess. I'm going to stick with my guns and go like tsunami order only, which is a 7605. I'll put this one in. So SPX, I'm putting in a flashpoint trade for tsunami only. So I'm going to go out 2 days, so 8/20 expiration. How many of you are with me for the first time as a new Flashpoint member, by the way? Yesterday inside the classroom, hope you had a chance to check this out in Telegram and go into your one-click trading. So here's the picture. If you go into the one-click trading member portal, trainings and bonus materials, check out this how to place orders. This is literally what I'm going to do right now. Okay. So I'm going to just place the order based on the tsunami level because we had a gap lower today. And it's not just like, oh, it's a little gap. It's like we gap like 40 points lower. So what is interesting though is this is like if here's what's price does this. If we gap lower and we spend the entire morning filling this gap around 45, that is the power of Flashpoint. Because what's the market doing? It's giving us pain and bouncing. Like that's the power of these crazy short-term flows. So even if I took the trade with my Flashpoint level and my tsunami level, this one is still not filling yet. We need a little bit more like pressure to the downside. So I'm going to go tsunami with 2 contracts CVS, correct? So I'll just follow the alert. And I wrote this morning because of the gap lower, I'm just going to take the tsunami level. So I'm going to do that here. Just follow the tsunami level. So the pain point's around 7,600. And I'll take that 7605 by 7610 out 2 days. So 7605, 7610. I'll take the 2 contracts and just do this good for the day. And set the alert at 265 debit. Good for the day. And if that activates, then I put in my 325 credit, put my stop loss in. I'm going to eliminate the stop loss after I execute this trade. So this would be I'm going after 30% here. I'll make that a little bit larger. So that'd be 80 cents a contract. So it'd be $160. And then once this is in, this is a bracket order. And so if this is where I teach this for all the Flashpoint members. So if this enters, okay, then here's the take profit that will sit in the broker platform. So if this enters, then this is my take profit. I'm going to cancel this trade once it's pending. So I'll go ahead and hit pending order, pending credit once that trade is filled, and I'm going to cancel the stop loss order because I'll manage the stop loss of time. So I put the trade in, and there's my pending debit. there's my credit order to take profit, and there's my stop loss order that I'm going to cancel because I'll manage that myself with time. Yeah, and I did 2 contracts. Okay, and that's out a couple of days. That's the 2-day expiration. So it's exactly what the alert said. All right. Let's see what we do for the rest of today. So what am I looking for today? Well, I'd like to see price, if possible. Again, this isn't going to be fun, but if the market breaches 7,700 and falls into open space, this is going to be most likely very good for our 76.50, or I guess it's the 76.35 butterfly. If price holds these lows, excuse me. If price holds these lows and makes its way back up to HVL, that would be very good for a butterfly. So 2 butterfly spreads for double ups. It's a lot of space in between. All right. Thank you. But with a 20 wide here and a 35 wide here, they're both pretty cheap. And so if one of them offers, $300, $400, $500, I'll take the profit and let the other one close out for full risk, or I'll just take the profit and manage. If there's any time premium left in the trade, I can close out for a smaller loss. So the goal is to manage, hopefully, a net profit on the day between one of those 2 butterflies. My least favorite trade right now is trying to pin 7,700 because it's going to be the most expensive. So I don't want to force that trade right now. The absolute GEX is not that convincing, right? I mean, we could see gamma-wise today. We could see gamma, 7,700 has been hit. We have 76.35 down here. We have 76.25 here. We have a call wall up here at 76.50. Or I'm sorry, that's HVL. I mean, so this is a candidate for testing a price. This is obviously a sticky point right now. This is a candidate for testing price. We'll see. HVL stands for high volatility level. Okay, all I refer to that as is, it's called HVL based on the Tanuki trade platform, but it's really the positive and negative gamma separator. So if you just have this as the line in the sand, above it is positive gamma, below it is negative gamma. That doesn't mean direction, okay? Negative gamma just means likely more volatility, because the way the flows work in a positive gamma environment, if we're positive gamma, which would be above 77.50, what dealer flows look like, what order flows look like is you have selling of puts and you have selling of calls. So it suppresses volatility and things just stay positive drift in a positive gamma environment. The reason negative gamma gets so tricky is because negative gamma is selling calls but buying puts. So it's more directional. And when those buy puts are activated for profit, they tend to yield those big swing V bottoms because, puts are closed for profit. When you're long a put and you achieve a profit target, if you're closing out all these profits, all of a sudden the dealers are exposed to, shorts. And in order to get out of those positions on those hedges, they just buy back the shares or buy back the instruments or buy the calls to offset it. That's why we have these like negative gamma environments that look like V bottoms. So anyway, we'll see. But we are in negative gamma unless we come back to 77.50. That's also the reason I chose that as a butterfly spread, because if we come back to this level to test HVL, I want to see if that will offer up some profit. All right. So, these levels still look very true. This shaded box right here, what you're seeing right now, I just built this workspace this morning. Tanuki Trade just released a expect to move box indicator for TradingView. And what's kind of cool is you can go back here. Let me see if I can show you this. Well, it was a little bit cleaner a second ago, but this is a really good kind of showcase for daily profit play. Can everyone see this 90.4%? 90.4%. Of the last 73 trading days, 90.4% of them have stayed inside the 1 standard deviation box. Is that not like right in line with what we do every single day in daily profit play? If it stays inside the box, we typically get paid in profit, right? So anyway, so they just added this. So if you are a Tanuki Trade member, if you subscribe to their, their web app, which I use every single day, we talked about this in Double Ups. I'm an affiliate for them. You just see me use a showcase. I showcase the software because I freaking love it. Like it's a great visual roadmap. Let's see what we get. Would I be shocked today to see price come down to 76.35? No. Would I be shocked today to see price come back to 77.50? No. Would I be shocked to see all the trades that I've taken for the last 6 months because of Tanuki Trade be hit? No. Like this is the best visual roadmap that I have. Period. So anyway, if you are a subscriber of Tanuki Trade and you have this web app, you can go into the web app on the left-hand side, click on TradingView Indicators, and then this page pops up. This is their TradingView profile, and they just added this options applied expected move box. Now they base this on everything that we built. Like this is part. I mean, I'm going to take some credit for this. I didn't code it. They're great developers, but what's fun is when I told them this is what I built the expected move box, and they're like, interesting. I like how you did that. So they built it for me. So inside the web app, you have the pre-market, end of day, and open expected moves. And then you have the smart range, which is real time, like 24 hours real time with the CFD. So this is how I pull the high and the low of the days. And when you look at the new indicator, this expected move box, if you add this to your favorites, so go ahead and click here, add this to your favorites, and then it has built another workspace for it. So I just added a workspace here, called it Tanuki Trade Expected Move, and then added in the expected move box. So if you can see this, I know it's maybe a little bit more challenging to see it, but can everyone see there's a slight gray zone here? So there's a slight gray zone right here, and this purple box just pushed a little bit lower. Okay, and what that is that is the opening bell expected move. So that's based on like current opening bell, any distortion in the call option volume, put option volume. And so what makes this interesting is look at how this thing just shifted. This shifted down to about 76.60 or so. Okay. Now, we have not been filled on daily profit play. So one thing I'd like to do is let's adjust our trade for daily profit play. Let me go back to SPX for daily profit play. Where did it go? This one. Okay. I'm going to use the, I can go 60. I'm going to go 60 by 55 or 60 by 50 on a new trade for daily profit play. So 76.60 by 50. I'll go 10 wide there. And then I'll still use the expected move box to the upside. If I wanted a bit more premium, I can go 77.75 versus trying to take the highs. But to me, the most conservative trade is take the highest box, take the lowest box, trade your levels, set your risk. Presumably get 95 and 99% second and third standard. Yeah, it's exactly right. So, I mean, a 1 standard deviation move is what, like 68 to 70% of the time? So the fact you're getting a 1 standard deviation move is within 90+% just shows you how efficient the market actually is. And then on those occasions that it pushes to that second and third standard deviation, that's like the 10% flare-ups we see. That's the Monday, Tuesday that happened back to back, which is very rare. Before that, it had been, weeks and weeks and weeks since we had another outsized move. Okay. So, all right, I'm going to go 77.90 on the top. So 76.60, 10 wide, 77.90. You can see this is a very low delta already, but that's the safe trade right now. And I'm going to ask for, at this point, I'm going to ask for, if the put side is going to get threatened, I might as well still get the credit that I want. So I'm going to go 850 credit. So I'm still going to risk $1.50 to make 850 and respect the box. So for daily profit play, I'm going to say cancel and replace. The expected move box. Expected move box is shifted slightly. I'm adjusting my pending order for DPP. Okay, adjusted. Correct. Yep. I just put that in Telegram. So cancel and replace. So I'm canceling this one, replacing with this one. And I'll make a note here. This one is, yep. So this one is canceled as of 9:55 a.m. And then replace with this one. Everybody good? Correct. I'm just changing the put side, right, Steve? That's the only adjustment that I see. The expected move box is the same on the call side. Still has a shaded zone up here, but the opening bell expected move has grown. So I'm just making that adjustment to the low 60. So I'm doing 60 by 50. 60 by 50. And that means that a price breaches, if it breaches down here, but then stays inside the box, I'm hoping that we can collect that premium and still get paid. Right. And if we collect that premium and we're getting $8, $8.50, that's a great trade. It's a super small risk. Okay. All right. We are still just hanging out doing nothing at 7,600 or 7,700. So it just seems like an absolute chop fest right now. Do I think price is going to stay here all flipping day? I freaking hope not. I'm hoping there's enough volatility to get us back to HVL today or breach 77 and continue to slide. Price would probably have to go 10 points above and beyond. So Randy, if you saw price go down to like 7,650 or 7,645, that should fill. The one thing you need it to do is it needs to probably get there before like 2 o'clock in the afternoon. Because if it's late in the day, I mean, you're kind of trading like everything is, at the money. There's no time premium left in 0DT when you're trading like the final, 30 to 60 minutes of the day, essentially. So we'd have to be like trading right down. Let me get this box here. We'd have to be trading like down here, probably around like 50 or 45 in the final, bits of the day to get filled. But if it does it early enough, and if we go down here and we breach that level and we get filled and it comes back up, that's awesome because we can also manage that profit early. So at the end of the day, I mean, look, we had an inefficient day yesterday. It was right outside that 29.2, and today it's like if we stay inside the box, which I made the adjustment here about 34.2. That was on my smart range today. If we are, I mean, somehow if we close beyond this box, then we have 2 days in a row, which not impossible, but very, very rare does that happen. Like I said, my hope is that we don't just hang out and stick to 7,700 all day today, because essentially that would be the markets doing little to nothing. I mean, look at this price action. If we just did nothing but hang out at 77 all day today, we're talking about a move that is, I mean, within like plus minus 15 points for the entire day. That would suck. So I'm hoping that there is some flow either coming back to gap fill or giving more pain to the downside. And I don't know. I don't know yet. Mark, you just took it at the money and got, what'd you do? How wide you go? To pull in that 235, I feel like you went pretty wide, dude. Did you go like 20 plus? How wide? But yeah, price so far is doing nothing. So we'll see. But it is pretty open space if we just get outside of this. So a breach lower or breach higher. Let's see if price can go somewhere. 7,700. David, that's not an equidistant setup. You've got 35 on one side and 30 on the other. So you want to go 30 wide, like risking 1,000 to make 2,000? I mean, well, even that's not right. If you're 25 wide, you go 77, 25, 76, 75. I mean, you can like that. That's not a bad trade. You can set the credit. I mean, let's see what happens. So yeah, I see what you're saying. So what Dave is asking about is if we did an iron fly here at 77. Okay, let me double check that gamma. I mean, it's there. Like 7,700 is there, but I wouldn't want to take the trade as is because it's going to be an at the money butterfly. So we can set the credit as we want. So if I went like 25 here, 25 here, right now it's showing I can risk 8 to make 17. That's a 2-to-1. Well, if I set it for, let's go like even less, like let's go like 2250. If I set this for 2250, I'm risking 250 to make 2250. I'd take my chances on that. But in order for that trade to get filled, we need to see price probably going up or down to make this trade out of the money and give us a lower cost. So as it is right now, because this is near to live price, this is almost an at the money iron fly. It's somewhat expensive. So it's like, I don't want to take the trade for a $7 or $8 risk. I want to take the trade for like a $2 risk, $3 risk. What David is saying is take it for $25, which, it's fine. That'd be, or I'm sorry, take it for $20. So $20. It's trading live at like 17. It's 1680 right now. I mean, so you're risking 5 to make 2,000. But what do you need to have happen? If that trade gets filled for $20 credit, you need price to stay below 77.20, above 76.80. Those are your break-even levels. So I like this 2250. I don't mind taking that trade. So I risk 250 to make 2250. That's cheap. So I'll put this in as a pending order. So that's double ups and will price come to us. Okay, now let me spend some time doing this. Somebody emailed me this morning. Who was it? I think it was Charles. I'm going to give you a big shout out here. And Phil, I'm going to give you a shout out too. Thanks for that email last night. Charles C. Charles said, closed out $385, 72% profit. I'm happy with that. However, this is one thing, and I appreciate Charles' honesty here. Says, thanks for explaining your strategy. I like the butterflies. I don't know how to manage the trade. So yesterday, and this is for one of my members named Chris, that we had some back and forth on yesterday. And look, in double ups, okay, this is me posting all this stuff. So, this member, Chris, was like, who's posting this stuff and saying that the winners and man, it's me. I'm posting this stuff. I'm not doing this to give everyone fear of missing out. I'm doing this because what do I continue to say about double up alerts? I say the best thing we can do in double up alerts is manage our winning trades, period. So when yesterday I had winner, loser, loser, and I took the net profit on the day, I'm still happy. I made almost $300 yesterday, scalped, had the whole afternoon not really stressing about things. Could I put on another trade? Could I have held on to the winning trade? All the above, yes. But the reality is, if you were watching Gamma yesterday, watching these live, sticky absolute gex levels, 7750 was a strong level all day. It stayed strong, it stayed strong, it stayed strong, and it nearly pinned. We closed at like 7745 yesterday. So if we did nothing on our trade yesterday, if we did absolutely nothing on this trade, the winning side got better and better and better and better until it would have cash settled. The team actually asked me, like, Chris, if you didn't close out the trade early, what would the trade have been? And I said it would have been a 505% winner because it was a 255 risk that cash settled end of day for $1,282. So it's one of those examples where our winner did extremely well if you just let it close on its own. Now, there are other cases that I don't manage the trade like this. And I should say this, I don't close the trade out early. I try to get the pin price at the end, and the market slips 8, 9, 10 points at the end of the day, and I don't get nearly the same winner. So at the end of the day, if I'm making profit, I'm happy. And if I'm closing the trade and I'm just commenting on like a winning side, you know, where I want to find myself is every butterfly trade that I take, I want to just take 2 contracts on all of them. But if I do that, I'm doubling my risk. Like right now, I'm playing enough butterfly spreads where it's like I'll throw out, $500 to $1,000 max risk, and profit wise, I'm talking maybe max risk of $1,000 with upside of $2, $3, $4, $5,000 if I land a profit trap. So that reward to risk to me is very favorable, and I'll continue to trade that way. But the only reason I'm showcasing this is because I keep saying it's all about managing winners. And so I put this comment here. What did I want yesterday? I wanted net profit. What did I achieve yesterday? Net profit. Could I have held onto the trade and held it all the way to close and gotten that 1288 settlement? Yes. And everyone be stoked. The difference for me would have been about $300 net profit, which is fine. If I make an extra $300 a day, that's great. But that extra $300 also comes with you sitting through the trade for hours longer and also crossing your fingers, watching gamma, sweating it out into the close because it's all or nothing. A butterfly trap at the end of the day is all or nothing. And I love it when it works. I'm not surprised that 77.50 was the pin yesterday, but it could also have slipped 10, 15 points lower or 10, 15 points higher, and we make $0 on that trade. So again, this is trading. It's like if you want to hang on to the greed of more profit, you're going to risk all of it. And it's a low risk trade, but we took profit yesterday. I'm not mad. And so it's not bragging about winners of FOMO. It's like I'm just showing that look, if you focus on managing winners, the risk side is so much easier to manage because our butterfly spreads are all low risk. Okay? So what I want to do is talk about this. Know the trade, know the break even, watch the P&L, manage the winners. So right now, the trades that we have, and I will show you this. Let's do this example. Let's build this trade out in options, Omega. Let's build this out today, and I'll put in the butterflies that I just took. Okay. So today's the 18th. I went down to the 7635, and I did 35 wide. So that's one butterfly. And then I did the 7750. I did the 55, and I did 20 wide there. And this should give us 2 butterfly spreads on the risk graph. Of course it doesn't. Build it again. They said that's because I'm using Microsoft Edge, which it's like whatever. All right, 7635, 35 wide, 35 wide, and 7655, 20 wide. Okay. There. Now, this is what the trade looks like at the end of the day. So can we agree here that my risk is pretty small compared to my potential reward? Yes or no? Way bigger risk, okay? Now, what I want to do is I want to isolate each one of these trades. This is why I say know the trade, know the break even, and manage the profit. Because all price has to do for today, price is hanging out at 77.08. Okay, fine. So if price goes up to like 77.40 today, we should be able to manage the profit here. If price falls down to even like 76.70 today or lower, we should be able to manage the profit here. So in real time, can you see how wide these are right now? Like I should see profit. Gosh, it's like just move like 10, 15, 20 points. We should see some profit somewhere. So the nice part is my dead zone live is barely showing up. Now, granted, this debit is cheaper now, and I'm in for a little bit more. My max risk is what? $1.90 and 230, 240. I'm probably risking like $400 maximum right now. So I'm a little bit pricier on the net debit. It doesn't matter. Anyway, if we get any movement, we should be able to manage some partial profit one way or the other. If price doesn't do anything today, it's like, well, then I have a dead zone that I'll take on a small risk. I'll take on like $400 a risk today. Okay. But let's break this trade down. So if I did the 7-6-7-0, 7-6-3-5, 7-6-0-0 for $1.90. Okay. Do you know how to calculate a break even from this? Because the $1.90 is my max risk. That means that from 7-6-7-0 minus the $1.90 is my break even high. And 7-6-0-0 plus $1.90, because that's the debit, is my break even low. So 7-6-0-1.90 and 7-6-6-8.10. Is everybody following that math? Type in a word yes in the chat if you're following that math. So if price is greater than 7601.90 or price is less than 7668.10, this is going to land in the profit trap. Now, the profit trap is not perfectly peaked unless I'm spot on at 7635. That max profit, this is 35 wide. I mean, my max profit is 33.10. That's a huge opportunity, but price has to be perfect at that center price. So obviously that's not easy to do, but if price is, let's say $5 above this, so if price closes here, or price closes $5 below this 7.6, I mean, that's still $500. There's $500 of profit right here. There's $500 of profit right here. There's $1,000+ of profit in here. It doesn't have to be perfect, right? So question I ask again is, if this is my trade for $1.90 debit, can you calculate your break even? If you do a butterfly spread, that is a debit. What you're doing is you're taking the debit off of the wings. So on the low side, you're adding the debit for your break even price, and on the call side or the upside, you're subtracting the debit. And that will give you your net break even price. So as long as price is below, so it's got to be below here, or above here. And that lands inside the profit trap zone. That's it. I mean, it's a big profit trap. But why is it big? And why is this a low risk trade? Because at the money, if price isn't going to fall 65 points when it's expected to only move about 30 points, yeah, it's a lower probability trade. It is 35 wide, yes. But it was way out of the money. And why did I choose 76.35? Because it was on my Tanuki trade software as a big gamma level. And it was a, highest put wall volume or whatever it was. I mean, it was labeled. Like all the stuff was down there. It was a nice little visual reference. We'll see what happens. So I took a stab at it. It doesn't mean that price has to fall exactly to 7635. Okay. The nice thing about butterfly spreads is in real time, look at how much wider this trade can be. We do not have to be super precise here. If price is going to fall, I can see profit here by 11:30 this morning. If price were to rally, I can see profit here, right? I mean, the nice thing is the butterflies are nice and wide in the morning. We don't have the perfect center price, right? Like I'm not going to make $3,300 of profit, but if this thing were to fall a decent amount, let's say we fall down to like, I don't know, 7.670. We fall 20 or 30 points. Well, could I turn that $1.90 into a $400 winner? Yeah. And I'll gladly take some profit there because if this one is a max risk of like, I don't know, maybe it's a max risk of $150 or something, $180, and this one's up $400, I'll take the profit. So if I know the trade, know my break evens, watch my P&L as a combination, then I manage the day. That's it. With two butterflies, you need to add the cost of both to get the total break evens. No, they're two separate trades. Just know your break even prices here. Where are your break evens here? What are your break even prices here? And then your debits, like, yeah, I paid $1.90 for this one, and I paid $2.20 for this one. Okay, so my net is $410. But if I have one winner, I don't have to make up $400. I need to make up either my max risk of $220 or my max risk of $190. I need one winner to manage the loser. So I don't need to make $400. I need to basically get $200 to $300 to pay me on one of them, and I cover the risk on the other. Does that make sense? And however you shake this out, is this setup a high risk setup in any way, shape, or form? No. It's freaking low risk, man. I mean, when I go through the tracker and I look at some of our winning trades, percentage of return on risk on our winning trades, 360%, 404%, 116%, 210%, 166%, 186%, 233%, 170%, 403%, 347% return on risk. You don't get that type of setup anywhere else. I don't care. You can introduce me to the best directional trader in the world. You're not going to see consistency like that. There's no freaking way. The markets, like indexes wise, you don't get that type of direction in an index. On an individual stock, sure. You want to be the needle in the haystack picker and you have these awesome high flyers. You can have some big winners like that. But man, you got to be so freaking good and lucky. On an index trade, it's like butterfly spreads are just the best. They're the best. So if you want a low risk, high reward strategy, butterflies are my favorite by far. And I don't mind throwing a couple out there to see if I'm going to be right. So where's my vulnerability today? Well, if I'm putting on butterflies up here, okay, and down here, that means that I'm vulnerable all the way through this dead zone. So if price will breach this level and fall, we're going to be in great shape. If price will get above this level and rally, we'll be in great shape. But it's 10:17. It's like, do I think price is going to stay here until 4 in the afternoon and do absolutely nothing inside of a 15-point range today? I hope not. I mean, Mark grabbed $235 a contract on an 80 wide. Just took advantage of time decay. But I want to see if price will make a break for one of these levels. Now, if I was staring at this, I mean, 7,700 is like, okay, well, it's 48 million. Does that mean it's my best pin price candidate today? Well, I mean, it could be, but it's still a high risk trade. You know, like this one's trading at 17. It's like I'm asking for more credit. If I want to go 77, 15 wide, it's still going to be expensive. I'm risking 295 to make 1,200. Look, if we pin at 77, this is not a bad trade. It's not super wide. If I take this trade, that's another $3 I've got to make up on a winning trade. But if we're going to pin at 700, does this cover my risk on the other trades? It does. If I want to take less credit on, it's like, give me, let's say 1350. If I risk $1.50 to make 1350 and we pin at 77, I'll take that trade. So like I can set this trade up where I want it to be and take that low risk. In fact, that's probably going to be more realistic than going 20 wide and asking for 2250. I would think. And it's also a little bit less risk. So if you want this trade, I'll take this one. This is 1350. I'm risking $1.50 to make 1350 and see if we can pin. Where did we open today, by the way? So we opened at 7,700. Yeah, I mean, I kind of like that trade. Um, Gosh, I mean, it's you're risking 280 right now, 285 right now. That is like that becomes the most expensive trade, and it's the narrowest trade. So let's see. I'll just set it up this way. I'll do 1350. So risk a buck 50 to make 1350 and see if 77 is a pin. Okay, that's awesome. Mavis says net it's 713 on the day. That's great. That's awesome. Okay, nice. Rest says grab some dollars out of that 76.35. Nice. Okay, I'm going to put this one in as a pending. This is going to be an iron butterfly trading right in the guts, but I want price to give me the fill. So I'm going to put this in for 1350, which means I'm risking 150. Price has to go up a little bit or down a little bit to fill this trade, but it's a low risk fill. So I'll put this one in if you want a third, and then this one's pending, not filled yet. So I'm going to put in a third fly. It's an iron fly, trying to play the 7,700 zone. Price opened today at 7,700. So far, little to no direction. But since it's at the money, I'm setting the credit where I want to manage risk. So 818. So 15 wide, give me 1350 credit, $1.50 max risk, pending, good for day. So if there's any direction, one way or the other, this one might fill and just it's a low risk trade. Now that means I've got to still manage my winning, my winning side. I've got to get my winning side big enough to cover the risk on these two small butterflies if I'm wrong. So we'll see. But I will say this, like, I will be very disappointed to see the market do freaking nothing today after just a gap lower. And it's like, we're going to stay right here at 77. I mean, if I zoom out, there's clearly support at 7,700. I get that. But please, for the love of God, do not stay here for a 10-point move on the entire trading day while we're sitting here at key support and we have a gap. It's like either press lower, move higher, do something. If this is support, act like it. If this is going to break support, act like it. Don't go 15 points for the entire trading day and say, like, that was your daily trading range. Like, that's way more disappointing to me than having, some direction on the day that we can manage. Okay. All right. Matt's asking on YouTube, do you typically manage this throughout the day based on price action? I mean, yes. So when I say manage the trade, like if I put in multiple butterflies, my goal is to manage the day. So for example, like right here, I'm in these two butterflies right now, and right now they're both upside down. So if one of these turns into a winning trade, my goal is I'm going to manage the winning side, make sure I have enough net profit to close out. If between these two trades I can net out $2 to $3 a contract, so $200 to $300 a contract, then I consider that a win. And that's managing the day. Now, if I think that, maybe the 77.50 or the 76.40 is going to light up here later in the day to be a better gamma level, like if I think that this is like, okay, this looks like the best candidate for a pin price, or this looks like the best candidate for a pin price, then I'm probably willing to hang on to that trade a little bit longer and see if it goes deeper and deeper into profit near the close. A lot of times when I'm managing these winners, if I can get to about 2 p.m. in the afternoon and manage net winner, I'm usually pretty happy with that. I love if I can get to 3 p.m. and I love even more a 3:30, and I absolutely love getting to 3:50 p.m. Those final 10 minutes, if you're sitting near your pin prices on like a 15, 20, 25 wide, it's a crap ton of profit. And it's not perfect. You don't have to let it cash settle, but like it's incredible how much profit you can see in the final 10 minutes of a butterfly spread. But as I said earlier, like it is all or nothing. So if I'm in the trade like I am now, which is fairly early, and I can take this early trade into like a 2 p.m. position, I mean, we should see a decent amount of profit. But if I like the evidence of where this gamma is showing, like if this absolute gex is showing here or showing here with HVL, doesn't matter. If it looks like it's worthy of holding, then 2 p.m. is great, 3 p.m. is better, 3:30 is awesome, and 3:45 to 3:50 p.m. is, I mean, get excited because if you're right, you can have a monster winner. And if you let it cash settle and it's spot on pin price, doesn't get any better than that. I posted in double ups. It's in Telegram right here. Put in Telegram. It should be in one click trading here in about 30 seconds. So it hasn't been filled yet, but that's just pending for the day. So we're trading at 77.08. Is price going to give us any movement here? Can we break above 20, 77.20? Can we break back below 76.95? I mean, it does seem like it's open. It's open. Like give us something, man. If it just chops here all freaking day, then that sucks. And that's pretty unusual as well to have the market, gap lower, have all this pressure, and it's like, don't go anywhere. Let's go 10 points the entire day. So I'm hoping that there's some late morning or afternoon flows to get us in a breakout. And everyone that's following the opening bell breakout, right? The opening range breakout. Guess what? It's right here. So we're going to make a run for it. There could be some flows attached to this. So if we breach the lows and there's a breakout, we breach the highs and there's a breakout. Let's see if there's some direction to it. That's not right, Dave. 12.10? No. For what? You're talking about the iron. That's the iron butterfly that I took. It's pending. I put a pending order at 13.50. It's trading at 12.10 right now. So it's not filled yet. I'm going to try to tighten that risk a little bit more. So, I may be willing to budge and say, okay, it's $13. Let's take the trade. It's $2 max risk. But it's also the narrowest. It's only 15 wide where the others are 20 and 30 wide. It's actually 20 and 35 wide. Yeah, I'm just still. It's like I acknowledge that today doing nothing is going to really make me mad. So the question is, if I think the market's going to do nothing, am I willing to take on the risk of that, $3 trade? I'm going to risk $3 here. If I replace this with a $12 credit, I've got to risk $300 on a 15 wide. I think there's still potential for an opening range breakout. Now, again, I look left on this chart. If this market's going to act like support, how about you freaking act like support? Hold 77 and work your way back up into HVL. You're not breaking any structure. You're not breaking the expected move box. It's like just turn back to fill the gap. But just to sit here and cling to 7,700, wait until tomorrow's FOMC, it's like, come on, you piece of crap. Let's see if we get some direction. What? iPhone said I got filled at 1350 credit. Is that a real account? I don't know how that got filled at 1350. If you're 7,700 15 wide, 7,700 15 wide, you got 1350 credit. I'm seeing live price at 1175. If you got filled, then you're probably showing some profit. Like you're showing like $150. Because I'm not seeing price anywhere close to 1350 right now. So, I mean, hey, if it's real, it's real. I just know that my live price is not filling that. All right. Let's see what else. Yeah, I'm still here. Yeah, I know. Usually it's always talking, yeah. No, I just had some comments coming into the Slack channel. I'm working on some so I'll give you a little well, I'll probably wait for like a sneak peek until I have something more tangible, but I'm working with our developers and a couple of people I brought in to basically I'm going to build out my own like Chris Pulver hub where I have all of my content, classrooms, video library with some AI assistants, some of my tools and bells and whistles that I want to build in and customize to my liking. I just want my own kind of like dashboard where I can have everything in one place. It's a great spot for members to go and check out. Have plenty of placeholders for all educational stuff, preview videos, teasers, things like that. So yeah, I'm working on stuff like that, trying to get some tools built in, and hopefully that's something I can get the team to put together for me in the next like 2 to 4 weeks. VIX insurance at 17 is expiring 8/18, showing a 110 debit. Yeah, let's take a look at that. Let's look at that synthetic VIX. So if it closes today, let's do this. So I'm going to go VIX long. Oops. I mean, my max debit is 474. I don't really want to take on shares. This is synthetic, so it is it's there's no assignment on the VIX. You can't own the VIX. But my max risk is 474. I actually don't even think it's that. The way this is calculated, I think this is pretty much a max risk. But I mean, is the VIX going to rip today to 17? I mean, anything can happen. Well, that's a September VIX. If you have the August one, I mean, just close it. I mean, worst case scenario is it doesn't make money. It's already down. I mean, I'm telling you, man, like this volatility stuff it just seems incredibly manipulated with just like I've not seen this type of vol suppression while having record breaking dispersion. I've not seen the VIX do this. So, does it mean that the VIX is going to rip to frickin' 40? Like, probably not. But I do think the VIX is due for like a flare up to, maybe 20 again. If we have like a really nasty VIX event, we might go into 30s and then revert. But I don't know. It truly, it's a tough trade. To be long the VIX is freaking tough because if your timing is incorrect, if your price time volatility, which is pretty much your option trade, if one of those elements is missing, you're not going to make money. Especially because I was directional, right? I'm synthetically long, so I need a price to go from 17 to 20. It never did. And if it went to 19 or 20, it's like I was break even, not profitable. So I was waiting to see like more of a VIX event if that would be the winning trade. But anyway, I still have futures hedges. We still have some other crash insurance things. So we'll see if the market has a flare up at all. But I'll make a note here in my public Telegram, crash insurance. The VIX 8/18 expiration, 17 buy call, 17 sell put, closing for loss. Like there's no assignment on it. We still have MES hedges, XSP, XPX hedges running for September and end of year. No, I'm just saying I'm closing one because the synthetic VIX didn't trade. I still have one out here to September, but that's it. So if we have a flare up between now and September 16th, I might get lucky on this one to be break even or better. But unless we have like a ridiculous, the VIX just ripped up to 50, I'm probably not going to see a lot of profit on this trade. Otherwise, even my other insurance trades, it's like, what's one way to like make this market be very difficult to time as far as like hedging or time to the downside? just go somewhere fast and then go nowhere very slow. So that's what this has been. I mean, if you look at how we got here, okay, how did we get here? This is a 5-minute chart, but we got here. You know what? Let's go back to this chart. So we get here very quickly, right? And then we go here, which is nowhere for another couple of months. And then we go here very quickly. And we went sideways right after. So it has been like a start and stop market. And the good thing is the start has been to the upside. The start's been to the upside. So that's been encouraging that it's like, yeah, this market is trying to just go to all-time highs and keep trying to go to all-time highs. So even talking right now, it's like, this market looks vulnerable. It's like, I mean, all this market needs to do is just burn through this. And this all of a sudden, like this catches up, this catches up, this catches up. It's like it just doesn't want to go down. Okay. Retreated. Yeah, but where's our strike? Yeah, I don't care. I mean, our strike's down here at 560 on SanDisk for Project Options Edge. I'll just pull one of these accounts. I mean, I'm up of my max profit of 1140. I'm up $935. Like, that's not a bad trade. If I don't close VIX insurance, will it just settle at a loss? It should, because there's no assignment. If you can close it for less than that, like I would just say, I just close it. You know, I mean, if you're saving yourself like $50 to $100, just close it. The odds of the VIX ripping up, to 20 today is probably very slim. Yeah. No, this trade's doing great. I mean, and the reason I'm not like jumping to close this trade is, I mean, we built out a $7,000 profit trap. Right now, there's a 95% chance of profit on the trade. If I check the deltas, I'd own this thing at $430, which is a huge discount. And $430 in this trade. I mean, again, we're only at a 32 IV rank, so this could clearly jump back up and get really high implied volatility again. But 430 right now is a 1 delta. So the real probability of taking on a lot of trouble in this trade, I just don't see it right now. Unless SanDisk and everything else, like the second half of the year, like everything AI implodes and collapses. Like storage, compute is being monetized. And this is the best performing stock of the first half of the year. I mean, even when Palantir was the best performing stock, it didn't just suck the second half of the year. Like it might struggle to make all-time highs, but I could see this still being a good trade. Now, the trade-off is it's like I'm up 82% of my max credit. Now, my max profit is up to $7,100. Because if I land a profit trap, it's up to like $7,000 on that profit trap, which again, landing that profit trap is going to be slim to none. Okay. But I will say this right now, because there's still 150 days left in the trade. If this thing creeps up to $1,000+, to me, that's a little bit more capital efficient just to take the win. Just to take the win. Like, yeah, I'll sacrifice $100 to make 1,000 and also save myself, let's say 120 days of expiration. JMV, yeah, I do. I still have 2.5 years of holding the freaking Swiss basket, and I take some scalps and swings. So yeah, I do. Somebody's asking if I trade the forex market. Yeah, I agree. So I mean, we just made 81% in. I mean, the trade's been open for 11 days, just so you know. So truthfully, the smart thing is take the profit. If I want the capital efficiency, for me to wait 150 days to grab an extra $200 or to ride out some higher volatility, it's not really worth it. So, and again, if it'll close. Now, let's see if it will close. If it does, I'll take the profit right now, and we can close this out for Project Options Edge. So I got in for 1140. Let's see if we can get like a slightly favorable close here. That was way too easy. I just closed it at $2. All right, let me try to improve that on another position here. I'm going to try to close it even lower. So that's $940 that I just made in 11 days per account. So ratio spread here. And I'm going to go like $1.90. Not filling. $1.95. Filled at $1.95. I'll close it. $1.95, that's great. So we are in for 1140 minus $1.95. That's $945 in 11 days. That's pretty damn good. I think that is getting rid of, obviously getting a lot of buying power back from that trade. It's a nice little winner. I got excited about a $7,000 profit trap, but yeah, I mean, we're making some cash here. So I'm going to close this thing down 195, which is actually a 20-cent improvement from the mid price. That one's not closing at $1.95. I'll penny this thing up. $1.96, closing for profit. Okay, so try $1.96. Excellent. Closed. $1.97. Yeah, these are good. Come on. $1.98. Don't be stingy, Tasty. You turds. 201. Okay, these are new accounts. Yep. All right, new accounts. Okay, so let me put that in Project Options Edge. Let's find Project Options Edge. Let's find SanDisk. Trade number 187. Close it down for $1.95 to $2 credit. So that would be what? 1140 minus $1.95, so $945. Not a bad return. 82.5% return on our credit. I'll take that. Okay, that's trade number 187. Trade management. Trade 187. SanDisk. Entry 1140. Credit closing $1.95 to $2 debit. Trade has been open for 11 days, and we're seeing 82.5% of the max credit profit. I'm forfeiting the profit trap potential, but that comes with a super high implied volatility and unnecessary stress. Take the profit, add back the buying power, and on to the next. Good trade. Yep, not bad at all. Okay, 1 second. Okay, good stuff. All right, where are we at for today? Nowhere. Yeah. Can't believe this, man. Well, it's just making me think a little bit more about, do I have to embrace that like 15, 20 wide? Now it's trading for 11.60 instead of $12. God, I freaking hate that trade right now. Let me see if I can finagle this a little bit differently. Let me cancel that iron fly for a second. What else can I do? Maybe I can kind of pin this thing in here to make it a little bit cheaper. If I went 20 by 20, still the same bullshit. Ugh. I mean, I just don't like the at the money, because it makes it like this is clearly the most expensive trade of my day. Now it could be the winning trade today, but if this one is wrong, I need the other ones to make up for a much larger risk. So, 15 wide, it's like I'm risking 345. Like it's still, I don't know. I'll keep the same trade in. I just canceled that one for 13.50. I'll go similar. I'll put it back in. I'll try to go for the $1.50 and just, I hope it gets filled. I don't know if it's going to win if it gets filled at 13.50, but it is incredibly frustrating to see this is our price action for the day. So my hope for the day is that price will either, one, if this support is vulnerable and it breaks later today, or this resistance intermediately is broken for the day. It's like we have open space to 77.50. We have open space, but I don't know, man. This just seems like, okay, all the flows put us into this vulnerable spot. We're coming into this territory with FOMC tomorrow, and the market's like, we don't want to go anywhere today. So, yeah, I mean, I might just be looking at that small little dead zone on my butterfly spreads today. But if the day is going to break anywhere, then hopefully we have a fighting chance. So this is still not a crazy convincing pin price. There's still a lot of noise between 7,700 and 7,725. We'll see. But fudge, man, that is very disappointing for like zero follow through in the first. I mean, granted, it's been an hour and 10 minutes of trading, so it's not like the day is done. So let's see what happens. Let's see if we get a breakout one way or the other. Doug says, totally disappointing. Yeah, but it's been an hour and 10 minutes and there's still a lot of trading left. So We don't know yet. What's more disappointing if it's 3:45 in the afternoon and this is what we're staring at price. That's way more disappointing. But for the first hour and 10 minutes, I can stomach some indecision. Let's see if the market breaks out of here. It's that simple. Okay. You guys, you do whatever you want. Like, I'm going to hang in there. I'm going to keep myself. There's risk on the day. It's a dead zone. I'm going to manage it. If I'm dead wrong, what's the worst that can happen? I lose the dead zone. I come back and fight another day. Okay. I mean, my gosh, man, like trading is not that emotional. So it's a trade. That's all it is. My goal is to win the day. Do I think I have reason and evidence to have a good level? HVL is a solid level. A big fat out of the money gamma is a good level if price is going to go anywhere. If it stays around 7,700, I'm trying to get filled. I just don't want to take the highest risk trade of the day at the money. My narrowest butterfly, my most expensive risk, it's like, yeah, I'd have to settle for like almost a $400 risk today. If it is wrong and this thing breaks out, I'm going to be super annoyed that I took that 7,700 trade because I forced it instead of letting price, look, if price breaks out and this gets filled for $1.50 risk, I don't care because this trade will pay way more money. Or if it breaks out here, this will pay way more money. But I'm not going to sit here and say, like, let's take the trade for $400 risk right now. It's like, that's stupid. It's double the risk of either one of these other butterflies. So I think what's more surprising is how the markets have done nothing in over an hour. So we'll see. But keep an eye on it. There's opening range breakouts for a reason. I mean, if this market has futures traders and they're trying to force anything around this U.S. market, they're getting absolutely chopped up right now. So we'll see if there's some, chase and some flows coming in, like either above or below 76 or 77.20 or below about like 76.95. See if there's some follow through. Yeah, but I'm not filled in that 7,700. I'm putting a pending order because I'm trying to keep the other credit as high as I can so I can have like a manageable risk. Okay, so we'll see how the day ends up. It has not been filled, Rob. Like, I didn't get filled. You're talking about the iron butterfly. It's a pending order. So I'm still pending. I'm just not lowering my credit. Like I said, I'd be willing to take this trade for like $13, like risk 2 to make 13. But right now it's trading for like $11.50. So now I have to risk $3.50 to make $11.50. It's like, I don't like that as much. It's fine, but is it my, I mean, it'd be one thing if I put the trade on where it's like, okay, well, we're at 52 million, but can everyone see that we have maybe this or this gamma? Like, I'm not precise at 77, and this isn't a huge, ridiculous sticky point. Like, it's notable, but it's not 100 million, So I'm just not ready to say like that's where I'm going to put a trade. So if I'm going to do it, I'm going to do it with small risk, and I'm going to try to get price to like come to me. If it doesn't, then I accept that I have like these lower risk trades on the outskirts. But I'm going to keep the faith for two things. One is we breach support and we keep falling, or we come back and find HVL and we basically take back what we lost overnight to see if the market can go anywhere. This is support, by the way. Support here. Like this is trading day, by the way. This was Thursday. We did move into that support. And we held there all day, and then we rallied up on Friday. But I'm curious, like, are we going to hold here all day today? So my hope is that we don't. I hope that we actually get some type of directional push. Let's just check yields for a moment. It's surprising to me that the 10-year, I guess, are retreating off these highs, which is kind of annoying. The 20-year retreating off the highs. The 30-year retreating off the highs. Well, there's probably a reason that there's not much follow through on the equity side. But if this retreats further, do we actually get an opening range breakout? So I'll ask this before I go. What is the worst thing that can happen today? Worst thing that can happen is my butterfly spread down here for less than $2 and my butterfly spread up here for $2 don't win. That's the worst that can happen. If I don't get filled here and we still pin at 77, well, I set the credit, I set the trade. I didn't accept the $300 to $400 risk. So that's on me. But I'm just going to hang out because if I lose, I accept it. And if somehow price decides to break out and go somewhere, we have a fighting chance to make some money. It's only been an hour and 20 minutes. We still have a lot of trading left, you know? So let's see if there is some type of breakout, some type of push, some type of anything at all today, and we can get paid. So as always, I'll be here and I'll be watching. I'll be managing trades. We'll see what happens. All right. All right. I'll let you go. Trying to think, do I have any sessions today? I've got a 1 o'clock. Yep. So I've got a 1 o'clock. I told Flashpoint members yesterday, if I've got new Flashpoint members, which I know I've got probably another 15 or 20 members that came in yesterday. I'm going to hold an 11:30 a.m. Eastern time masterclass if you'd like to join in for Flashpoint income. So I will just send out, you've got Telegram from me. So Telegram, one-click trading. I'll make sure that Megan posts that for one-click trading. But if you are a member of Flashpoint income, I will do a masterclass today at 11:30 a.m. So in about 35 minutes, we'll jump into a live class. Lennon, I'm looking for that one to be like $13 to $13.50 credit if I'm going to take that 15 wide. Okay. So here's what's going to be encouraging. Let's say the market breaches 76.90 and just has a nice clean break, retest, and go. That would be fantastic. We're looking at the lows of the day. Take a look. I mean, the expected move ranges can still push down to like 76.60 today. So hopefully it's trying to. If it does and it breaks that range, it's like we might see this shifting lower. We might see the smart range shifting lower. I mean, I don't think that this is here by accident. I mean, I do wonder if there's a bunch of out of the money put options today that maybe if we break that 7,700 level and have some open drive to the downside, we might drift to 65 or 60 or who knows. But if we drift down there, like our butterfly spread is wide enough that we should see some profit that we can manage. I mean, it probably just needs to go to like 76.90, 77.25 or so. Like it just needs to get away from 7,700. So that's all. All right. So 11:30 masterclass. No, I didn't. You realize you guys get to watch me do other stuff every single morning. Like I'm not canceling stuff. I'm not like, oh, I'm going to move this around and do. It's like I have the same trade pending. I have the same trade filled. Here's what's in this morning. So these are the two butterflies I have. Double up for $1.90, double up for $2.40. They're running. They're both upside down. That's the risk I accept today. If this one gets filled for $13.50, it's another $1.50 of total risk I'm adding. Then I have three areas that I'd like to see price hang out later today and later this afternoon to try to manage a winner. Okay. All right. Cool. So let's do this. Let's wrap things up here for today's daily profit plan. I'll continue to work. I'll try to get something tangible to show and tell with the little Chris Pulver pub that I'm working on, or a Chris Pulver hub that I'm working on. Should be fun. I'll bring in some cool tools, watch list scanners, stuff like that I use, and hopefully build it all in one place. Also, I have like my entire course catalog kind of on showcase. You can get some, on-demand webinars or videos or teasers or strategy stuff. And just to make sure it's like, yeah, you can check it out and it all plugs in and wires up to one-click trading for members. It'll have automated trade alerts and things like that. So the goal is to make my life a little bit easier, take all these sessions like this and transcribe them into kind of like masterclass notes, because I saw somebody just mention this, like Roy says, every morning's a masterclass. I mean, in a way, it's like, yeah, we do this stuff every single day. There's always nuggets to take away from these morning sessions. It's real trading, it's live experience, and this is what makes us better traders. We build on experience. We, learn on our winners. We learn on our losses. We, ride the profits together, and we deal with the troubles and challenges. You know, I wish I could say every day I place a trade, I'm going to win, but it's like, yeah, I take losses too. But I'm pretty good, and we win a lot, and I expect to win, or else I wouldn't trade. So, all right, 11:30, I'll see you in Flashpoint for a little masterclass. 1 p.m., I got another webinar. Look for updates today in daily profit and double ups, and see what the day gives us as far as unfolding. So, all right, I'll let you go. See you. Bye.